Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. I'm going to give you an updated Nvidia stock analysis video today. At the time of making this video, Nvidia stock is down 45% from the most recent peak. The entire semiconductor sector, as represented by the iShares semiconductor ETF here, is still in a large bear market. This semiconductor ETF is down 26% from the most recent peak. The Nasdaq index is also in a bear market. It's down 25% from the most recent peak. Many analysts believe that we're heading into a recession and believe that the semiconductor market will likely slow down going forward. So in this video, I'm going to talk about, is Nvidia stock a buy now, and is Nvidia a great company for long-term investing? I will cover these topics in this video. First, Nvidia's business and financial overview. Second, Nvidia stock's biggest risks you should know. Third, Nvidia's economic moat and long-term prospects. Fourth, Nvidia stock valuation. You will learn how to calculate Nvidia stock's intrinsic value per share, so you will know when Nvidia stock becomes undervalued. And fifth, will I buy Nvidia stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos a week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos a week that will help you become a great investor. The link is in the video description. Take a look. Let's start. Before talking about Nvidia's biggest risk and long-term prospects, I want to give you a quick overview of Nvidia's business so you will understand how Nvidia earns its revenues and profits. Nvidia is most well known for making high-performance discrete graphics processing units, GPUs for gamers, professionals, enterprise customers, data scientists, researchers, and data center customers such as Amazon AWS, Microsoft Azure, and Google Cloud Platform. If you're a computer gamer, you will know that Nvidia's GPUs are used in many high-end gaming PCs, gaming laptops, and Nvidia's own cloud gaming service called GeForce Now. Nvidia also made the system-on-chip SoC in the Nintendo Switch console. Outside of gaming, Nvidia's GPUs and other accelerated computing processors are used in many data centers, servers, supercomputers, research centers, professional workstations, and even autonomous driving vehicles. Here's the important part you want to know that shows Nvidia's competitive advantage. In recent years, Nvidia has shifted its focus to AI-driven accelerated computing platforms and hardware for both consumers and data center customers. This is a very important shift for Nvidia because artificial intelligence, machine learning, deep learning training and inference, and robotics AI will be the biggest trends going forward. In fact, the biggest cloud providers such as Amazon AWS, Microsoft Azure, and Google Cloud use Nvidia's GPUs to accelerate their data center workloads, data analytics, and AI applications. This is because Nvidia's GPUs and data center processors are the best in AI workloads such as deep learning training and inference. Traditionally, data center CPUs alone are not powerful and efficient enough to run many compute-intensive data analytics and AI applications. This is why most of the largest cloud providers invest in Nvidia's accelerated computing platforms, such as the DGX systems and the most leading-edge GPUs. In terms of financials, if you look at Nvidia's latest financials here, you can see gaming revenue, mainly from selling discrete GPUs to consumers, was 44% of Nvidia's total revenues here. The data center market has become Nvidia's largest revenue source. You can see data center contributed 45% of Nvidia's total revenues. In the latest earnings call, Nvidia's management said data center has become our largest market platform, and we see continued strong momentum going forward. Nvidia is a very profitable business. For example, if you look at the financials here, you can see Nvidia's GAAP gross margin was 65.5%. Its GAAP operating margin was 22.5%. In comparison, Nvidia's non-GAAP operating margin was much higher at 47.7%. This is because Nvidia had to pay a one-time acquisition termination fee of $1.35 billion from failing to acquire ARM from SoftBank. Regulators had to block Nvidia from acquiring ARM because of antitrust issues. Again, this is a one-time cost. In the past 5 years, you can see Nvidia had very consistent revenue growth, operating income growth, operating cash flow growth, and free cash flow growth. Obviously, past performance does not guarantee future results. When it comes to investing, we have to be forward-looking instead of backward-looking. So let's talk about Nvidia's biggest risk first, before talking about its competitive advantage and long-term prospects. I believe Nvidia's biggest risk is the oversupply of existing GPUs that will likely lower the demand for Nvidia's next-gen Ada Lovelace GPUs. At the time of making this video, there's a large inventory of existing GPUs that are sold by retailers, gamers, and crypto miners. During the pandemic, there was a huge shortage of Nvidia's GPUs because all the crypto miners, scalpers, and gamers were buying high-performance GPUs. All the GPUs were selling well above their MSRP prices. Now, after all the cryptos including Bitcoin and Ethereum have crashed, many miners are forced to sell their Nvidia GPUs at deep discounts because they can no longer make profits from mining cryptos. At the time of making this video, there's too much GPU inventory in the market. This is why all the Nvidia GPU prices have dropped a lot in recent months. For example, according to this article here, you can see all the Nvidia's GPUs have dropped a lot in the recent month here. Also, according to this article here, Nvidia had decided to offer discounts for their most expensive GPUs. Nvidia knows that many vendors have problems selling their GPUs because many crypto miners and scalpers started selling their GPUs. Nvidia wants to get rid of existing GPU inventory as much as possible before releasing its next-gen Ada Lovelace GPUs in the upcoming months. The biggest short-term risk is this: if Nvidia still has too many GPUs in inventory before the next-gen GPUs are released, consumers will likely buy Nvidia's last-gen GPUs because their prices are much lower now. Management said this explains all the macro risks that have impacted the demand for Nvidia GPUs, at least in the short term. However, we started seeing softness in parts of Europe related to the war in the Ukraine and parts of China due to the COVID lockdowns, as we expect some ongoing impact as we prepare for a new architectural transition later in the year. We are projecting gaming revenue to decline sequentially in Q2. Channel inventory has nearly normalized and we expect it to remain around these levels in Q2. The extent in which cryptocurrency mining contributed to gaming demand is difficult for us to quantify with any reasonable degree of precision. The reduced pace of increase in Ethereum network hash rate likely reflects lower mining activity on GPUs. We expect a diminishing contribution going forward. Other macro risks include high inflation, high component costs, US Fed rate hikes, upcoming recession, supply chain issues, and chip shortage. All these macro risks affect all the semiconductor companies, including Nvidia. Now, many analysts expect that we're heading into a recession and expect that the semiconductor market will likely slow down in the upcoming months. Many analysts believe that the demand for Nvidia's next-gen GPUs will likely slow down because of the oversupply of GPU inventory I talked about earlier, and because consumers may not want to spend too much money on Nvidia GPUs if we head into a recession. Typically, Nvidia GPUs for consumers will cost $400 to $2,000 each. Another risk is increasing competition with AMD and Intel. The discrete GPU market is dominated by two major players, Nvidia and AMD. Intel is the third player, but Intel is far behind in discrete GPUs for both consumers and data center customers. For example, according to this website here, Nvidia had a 78% market share in the discrete GPU market in Q1 2022. AMD had a 17% market share, and Intel only had a 4% market share. In the upcoming months, Nvidia will be releasing its next-gen Ada Lovelace GPUs, while AMD will be releasing its RDNA 3 GPUs. Obviously, it's very hard to predict whether Nvidia or AMD's next-gen GPUs will be more competitive. In my opinion, I believe Nvidia will still have the largest market share in next-gen GPUs. This is because Nvidia GPUs tend to be much more supported and optimized across most games. Since most computer gamers use Nvidia GPUs, most developers will optimize their games for Nvidia GPUs. For example, if you look at the latest monthly Steam survey here, you can see that most users on Steam use Nvidia GPUs and fewer users use AMD GPUs. This is consistent with Nvidia's 78% market share and AMD's 17% market share in the GPU market in Q1 2022. Also, at the time of making this video, Nvidia is well ahead in hardware-based ray tracing technology and deep learning supersampling DLSS technology compared to AMD's competing GPUs. Intel is still releasing its first-gen Arc GPUs to compete with Nvidia and AMD in the mid to low-end GPU market. Here's the problem. Intel's first-gen Arc GPUs are not competitive in the high-end GPU market. This means Intel will need to compete with Nvidia and AMD on pricing. Based on many third-party reviews, Intel's first-gen Arc GPUs have a lot of driver issues. Intel GPUs are not optimized for many games yet. I believe this is why Intel has delayed releasing its first-gen Arc GPUs for over a year already. By the time Intel releases its first-gen Arc GPUs, Intel's GPUs will be at least one generation behind Nvidia's next-gen Ada Lovelace GPUs and AMD's RDNA 3 GPUs. This is why I'm not worried about Intel entering the discrete GPU market. In my opinion, it's extremely hard to compete with Nvidia and AMD in the discrete GPU market, especially in the high-end GPU market. According to Morningstar, Nvidia has a wide economic moat because of Nvidia's intangible assets in designing the most leading-edge GPUs, especially GPUs that can accelerate computing in artificial intelligence, machine learning, deep learning, data analytics, digital twins known as Omniverse, and robotics AI such as autonomous driving vehicles. This from Morningstar. We believe Nvidia possesses a wide economic moat stemming from its intangible assets related to the design of graphics processing units or GPUs. The firm is the originator of and leader in discrete graphics, having captured the lion's share of the market from longtime rival AMD. We think the market has significant barriers to entry in the form of advanced intellectual property, as even chip leader Intel was unable to develop its own discrete GPUs despite its vast resources, and ultimately needed to license IP from Nvidia to integrate GPUs into its PC chipsets, though more recently Intel is vying to develop its own discrete GPU. To stay at the cutting edge of GPU technology, Nvidia has a larger R&D budget relative to AMD and smaller GPU suppliers that allows it to continuously innovate and fuel a virtual cycle for its high-margin chips. The barriers to entry into the GPU market are extremely high. This is because it is very capital intensive to design your own GPU, manufacture it by outsourcing it to TSMC and Samsung Foundry, and sell it to mass consumers and data center customers. Even if you have billions to invest in R&D and hire the best talents and engineers, it does not guarantee you can succeed in the GPU market. For example, Intel left the GPU market more than 20 years ago. Based on what I know, this is the second time that Intel is entering the GPU market to compete with Nvidia and AMD. Intel has much more financial resources than Nvidia and AMD, but it still cannot compete with Nvidia and AMD in the discrete GPU market, especially in the high-end GPU market. In terms of long-term prospects, I believe Nvidia's biggest growth opportunities will be selling GPUs and other accelerated computing platforms and systems to data center customers such as Amazon AWS, Microsoft Azure, Google Cloud, Alibaba Cloud, and Oracle Cloud. Nvidia is also expanding to other vertical markets such as financial institutions and automakers that need the best accelerated computing GPUs and platforms for AI training and inference, data analytics, AI recommendation systems, conversational AI, and robotics AI. For example, I believe Nvidia Drive autonomous driving platform will eventually become a larger revenue source for Nvidia. Right now, it's not a large revenue source. This is from the most recent earnings call. It shows that Nvidia has the largest growth opportunities in data center customers, even if the semiconductor industry is slowing down in the upcoming quarters. Moving to data center, record revenue of $3.8 billion grew 15% sequentially and accelerated to 83% growth year-on-year. Revenue from hyperscale and cloud computing customers more than doubled year-on-year, driven by strong demand for both external and internal workloads. Customers remain supply constrained in their infrastructure needs and continue to add capacity as they try to keep pace with demand. Revenue from vertical industries grew a strong double-digit percentage from last year. Top verticals driving growth this quarter include consumer internet companies, financial services, and telecom. Overall, data center growth was driven primarily by strong adoption of our A100 GPU for both training and inference, with large volume deployments by hyperscale customers and broadened adoption across the vertical industries. Top workloads include recommender systems, conversational AI, large language models, and cloud graphics. AI and data-driven machine learning techniques for writing software and extracting insight from the vast amount of data that companies have is incredibly strategic to all the companies that we know. Here's the important part that shows why Nvidia's GPUs are used by all the major cloud providers, high-performance computing customers, and data center customers. Based on what I know, Nvidia's GPUs are one of the best in data analytics and AI applications and workloads such as deep learning, training, and inference. Nvidia's data center businesses largely focus on acceleration, largely focus on machine learning. Our data center business is strong and was strong last quarter. It's going to be strong next quarter, and the reason for that is because we're in an early adoption phase of machine learning across all of these data centers. We want to produce intelligence, and there are several techniques now that have been created to make it possible for most companies to apply their data to extract insight and to automate a lot of the predictive things they have to do and to do it quickly. And so I think the trend that you hear other people are experiencing about machine learning, data analytics, data-driven insights, artificial intelligence. However it's described, it's all exactly the same thing, and it's sweeping just about every industry and every company. With respect to software, there are two. Well, first of all, there are all kinds of machine learning models, computer vision, speech AI, natural language. Largest, the most visible one is self-driving cars, which is essentially a robotic AI. But anyhow, all of these different models need an engine to run on, and that engine is called Nvidia AI. In the case of hyperscalers, they can cobble together a lot of open source, and we provide a lot of our source to them and a lot of our engines to them for them to operate their AI. Now we're working with thousands of startups, large companies that are building who are using the public cloud, and so it's driving a lot of demand for us in the public cloud. I think we have now 10,000 AI inception startups that are working with us and using Nvidia AI. Whether it's on-premise or in the cloud, it saves money because the computation time is significantly reduced. The quality of service is a lot better, and they could do greater things, and so that's driving AI in the cloud. And so all of these different factors, whether it's just the industrial recognition of the importance of AI, the transformative nature of these new AI models recommender systems, large language models, conversational AI, the thousands of companies around the world that are using Nvidia AI in the cloud, driving public cloud demand. All of these things are driving our data center growth, and so we expect to see data center demand remain strong. In the short term, at least over the next several quarters, I believe Nvidia's gaming revenue growth will likely slow down because there's too much GPU inventory in the market after the crypto market crashed. In the long run, over the next 10 years, I believe data center will continue to be the biggest revenue driver for Nvidia because there's a large demand for the most leading-edge GPUs and accelerated computing platforms for data center customers, especially in AI applications, data analytics, AI recommendation systems, conversational AI, natural language understanding, and robotics AI. In my opinion, many services we use every day will be driven by AI and machine learning going forward. Now, I want to show you how to calculate Nvidia stock's intrinsic value here. If you want this calculator, you can download it in my Patreon blog in the video description. These are the key assumptions in this calculator. First, I define Nvidia's intrinsic value as its future free cash flows discounted to the present day. The discount rate is 10%. This is slightly higher than the 9.3% cost of equity from Finbox.com. Nvidia's most recent 12 months of free cash flow is $7.84 billion. Based on the biggest risk and the long-term prospects I talked about earlier, I expect Nvidia's free cash flow will grow at a compound annual growth rate CAGR between 20% and 30% over the next 5 years. This is from Seeking Alpha. You can see Nvidia's forward average annual growth rates are expected to be between 18% and 32% over the next 5 years. We'll go over these 3 case scenarios: worst case, normal case, and best case scenarios. Under the worst case scenario, we're using a compound annual growth rate CAGR of 20% over the next 5 years. If we forecast Nvidia's free cash flows for the next 5 years and discount the free cash flow to the present day, Nvidia's intrinsic value should be around $320 billion for the entire company, or $126 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using a compound annual growth rate CAGR of 25% over the next 5 years. Then Nvidia's intrinsic value should be around $388 billion billion for the entire company, or $153 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a compound annual growth rate CAGR of 30% over the next 5 years. Then Nvidia's intrinsic value should be around $467 billion for the entire company, or $184 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Nvidia's intrinsic value should be around $154 per share. This means I believe Nvidia's stock is slightly overvalued at the time of making this video. In comparison, Morningstar has given Nvidia a much higher fair value of $200 per share. So will I buy Nvidia stock? My answer is it depends on the stock price. I already have Nvidia stock in my growth stock portfolio here. This is one of my portfolios. I did sell a small portion of Nvidia shares recently because I wanted to take the gain and reinvest the gain in other wonderful businesses that are undervalued. I will likely buy more Nvidia shares going forward when the stock price becomes undervalued again. I like Nvidia's large economic moat and its dominant position in the discrete GPU market. I believe AMD is the only company that can compete with Nvidia in the discrete GPU market. It's a two-horse race in the GPU market. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. It's important to always invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.